as well. Let's quickly welcome in our guest for the show today. We have Vijay Bhamwani, author and CEO at bstvindia.com, and Prathamesh Malia, Chief Analyst, Non-Agri Commodities and Currencies at Angel Broking. Welcome to the show, gentlemen. To start off with, Vivek, I'll come to you on this. Earlier, we've been talking of the trade war in between where India as well as US goes. Now, it's gone, as Vijay was mentioning as well. But Prathamesh, coming to you as well, what are your thoughts? Because the trade war is escalating. There is going to be a major impact as per on a consensus basis as well. What do you make of this?
I think there is still some scope for negotiation. I think this issue is really intensified and the world is totally focused on US and China. I think just a passage of time wherein these two countries would come to table and would discuss trade wars and tariffs in a significant manner. But for the time being, I think the sentiments is nervous. I think correction would happen in all the metals, which is what we're witnessing. And yes, people are running towards safe haven, gold and silver being trading positive.
Right. So that's in terms of where the overall outlook is concerned. Prathamesh, coming to you as well, we've seen a major sell-off in overnight trade in terms of where steel is concerned. And that has also, spilled into other inputs like nickel as well as zinc. While if you talk in terms of where aluminium is concerned, that has almost sank to its weakest level that we've seen since October 2016. And again, the concerns are similar. Any thoughts on any of these base metals?
I think nickel and zinc would be the toughest hit in the entire sanctions bid between US and China and the trade war and tariff war. I think that these are the two metals which would take a hit first. I think nickel very soon, it's already trading negative now. It has fallen in overnight trade. I think the fall in the Indian markets would extend towards 820 mark as far as nickel price goes. As far as zinc is concerned, already 10% correction has happened in this particular counter in the Indian markets as well as in the international markets. LME, I think there is still room for further downside in zinc prices. I think 202 is what we're looking from here on, which is almost a significant correction of around 4 to 5% from current market price. So we are not bullish on any of the metal as far as current market price and the current trend goes.
Right. So Prathamesh, any sell strategies that one could look at in terms of where base metals go?
Yes, I would definitely pick copper and nickel as one of the two topmost picks in the base metal space. I would sell copper at 437, 438 points on the MCX, and the stop would be around 442, target lower towards 430 and 427. As far as nickel goes, it's already fallen almost 30 points from a trade per se in yesterday's trade itself. I think move lower towards 820 seems to be there on a card. So I think 850 is what I would sell nickel in the Indian market. 860 is the stop, target lower towards 820.
Right. So that's in terms of strategies, short strategies that one could look at in terms of base metals. Vijay, coming to you as well, markets. Prathamesh, what is your call in terms of where gold is concerned then?
I think the maximum point that you can see for the near term, I think from a 3-month perspective per se, would be close to an Indian markets around 31,200 mark. But I'm really not too bullish on gold. Take into consideration the set of factors with regards to prospect of rate hikes in 2018 and 2019 is what will stop or cap the rally in gold as well as silver prices. However, immediate near-term set of uncertainties is what driving the precious metal packs. So immediate near term, I would be buyer in both the metals, but consistently from a longer term perspective, there is not much room for a positive move in any of these metals.
Right, so that's a positive view at least currently coming in terms of a gold. Prathamesh, with all of this said and done, what are levels that you are tracking? Because the expectation, across is that yes, the up move is expected to continue, but overall, what's the outlook now?
I think OPEC is really doing its bit, and the compliance seems to be very high as far as OPEC nations goes with regards to capping its oil output, and it is clearly reflected in the price. But I'm a little bit concerned on the production that is coming from US. I think 10.5 million barrels, which is very close to Russia as well as Saudi, being there on the same plate, wherein US is almost producing close to 11 million barrels per day, is something which creates a cause of concern for oil prices. I think maximum possible thing from here on for 15 days or a month perspective would be around 69 for WTI is what we're looking at. But I'm not immediately very highly bullish on this particular counter. I think the increase in production is something which would possibly pull down prices back again towards 60 mark. So I'm not so bullish. But immediate near term, I would play for a moment of $2.
Right. So that's the trade that we need to look at. Prathamesh, I'll come to you on this one. What's the indication that you're getting in terms of where the dollar pair goes? Because we've seen some bit of losses that have come in. If you see the dollar yen pair as well, again yen has moved higher. What do you make of it?
I think it's all to do with what's happening in the US and simultaneously the other currencies. I think the trade war is something which is really inciting into all the other asset classes. So I would probably be a silent investor or trader as far as currency market goes, because I need to really see what's really solution comes out from the entire scene of trade wars, and let the situation stabilize, and then we see particularly where the dollar index headed and where the other currencies are headed. But if you're looking from immediate near term, I think I would play safe and just to wait and watch as far as currency play concerned. But coming back to USD and IR per se, I think it is moving in the range of 64.7 on the lower side and 65.2 on the higher side. I would particularly play this range as far as the spot goes, and unless and until this range breaks, it would be a decisive scenario which would be decided by what factors come in from India as well as what factors come in from US.
Right. And what is the levels that one could be watching out for on the yen as well? Because it has already hit a 17-month high, and we've seen levels of almost 104 over there. Do you think the pressure could continue?
Yes, I think there is a little bit of pressure out there. I think possibly it would move towards 102, 101, so which is something which is very uncertain, and I think this uncertain scenario is something which really pans out how trade war moves from here on. So I think it is totally an uncertain scenario where the currencies are headed.
Right, so the trade war is of utmost importance here. Completely out of time, but Vijay, one last question that I want to ask you over here is that we are talking of the trade war. A lot of comments that we've heard from Trump in terms of these are just basically negotiation tactics that are being followed as well right now. In fact, thank you, gentlemen. Thank you, Prathamesh as well as Vijay, for joining us on the show. And with that, it's a wrap on this edition of the Commodity Trade.